Hi, this is Lakhi Singh, the property fixer, here to fix you and help you grow your property and your business affairs to the next level. So if you're looking for knowledge and insights about how to get involved in property, solve your problems about scalability in your property business, then do watch our 20-minute clips. We've taken them from hundreds and, thousands of videos that we've taken over the last 6 months, and we've broken them into simple chunks which can make them useful for you. So do watch and do subscribe to our YouTube channel underneath as well.
LPA receivers comes under the Landlord and Property Act 1925, I believe, and they are only appointed for buy-to-let or commercial assets. So they're not appointed by the bank in relation to residential houses in which people live in. So that's the first point. So technically, that's incorrect, first of all. So yeah, no, LPA receivers can't be appointed on your house. And if they are, it's probably because you've got yourself a buy-to-let mortgage and you're living in your house. And then yes, and you shouldn't really be living in your house. You bought yourself a commercial mortgage. You're probably thinking, I'm going to rent the property out. You had a change of circumstances, decide to live in the house, but didn't notify the bank is probably the only way that I can see it happening. And then if you go into arrears, if you're living in the house, but it's a buy-to-let, technically you shouldn't really be living in there. You should need to notify the bank to make them aware that it's a residential property now, and they'll probably change the rates accordingly. Normally the residential mortgage rates are lower, but they tend to be a bit sometimes hesitant in changing it. So you need to actually probably give them the correct information for them to decide. But let's just say if you haven't told them, yeah, then what can happen is that if you don't pay your mortgage, have a missed payment, or you're in arrears, or you have a default, or a CCJ, or something the bank's not happy with because you're contravening their contract that you had with them for the buy-to-let mortgage, then they're within their rights to appoint LPA receivers, which is usually a firm of surveyors or estate agents, which can literally come and change your locks, and will then want to collect. They'll want to collect the rent from you and get the money coming in to themselves directly, and they'll also have the power of sale. So if you are living in there, then that's actually going to be even a bigger problem, because you've contravened the contract that you had with them. So you're going to be in quite a loose wicket to be doing that.
Okay, so if you have got a property and you're living in it and it's a commercial property, that's what you're saying, it's probably better for you to let the bank know so they can change your mortgage. But what if changing your mortgage is going to require you putting money in, and they're going to say, well, you don't have the right loan to value, the property value has crashed? What do you do then?
I think that when you come and talk to Lakhi Singh, the property fixer, because if your property values crash, you're in negative equity, it's going to be quite a difficult situation, because the bank's got you over a barrel. So technically, they could actually enforce the contract the way that they want. So whatever you say, whatever you do, would be meaningless, because they can just literally do whatever the Landlord and Property Act 1925 allows them to do, which is to literally take your property over and get you to pay them the rent if you're the tenant. Obviously, if you're living in there, then they could probably change the locks and evict you and sell the property, because they've got the power of sale. So they're going to be very clinical about it. And in this market, as the situation becomes more prevalent, the falling market, you're going to find that this situation is going to become fairly common. Yeah.
Okay. So what can you do then to prove that you're living in the property then, Lakhi Singh? if you are living in a property and you want the bank to be assured that you're living in this property and you're not really letting it out as a commercial entity, even if the mortgage is, what documents are there that you can use to prove to the bank that you are living there?
You could show them your council, basically the council bills and your utility bills. They are proof, but if you can actually backdate them and show them the backdated time, if you've been in there for, let's say, 10 years and you got backdated bills, but they can also check themselves. You know, so you can't really hide anything. Actually, literally ring the council and get the information themselves. It'll be on public record.
Yeah. So that's one way of protecting yourself in case you're living in a buy-to-let that you're using as a house. Otherwise, there's no reason that an LPA receiver should be appointed on a residential property. Is that what you're saying, Lakhi Singh?
Yeah, the only time the LPA is being appointed is in the circumstances where you're, you know, if it's a residential property, that's the only time that I think they can probably appoint receivers. But even then, it doesn't stop them appointing receivers because you're living in there, because you've contravened the contract. So what normally happens?
So every contract,
yeah,
every contract has a clause, the LPA receiver clause in it. Is that what you're saying?
No, what I'm saying is that if you are living in a normal residential property, it's not a buy-to-let mortgage or a commercial mortgage, then the LPA receiver clause is not in the contract. So what happens with that is that's highly regulated by the FCA, the Financial Conduct Authority, and banks aren't allowed to appoint receivers on properties because they can do that at a drop of a hat. In a couple of days, they can appoint receivers. So what they have to do is they have to be seen to be reasonable in giving you an opportunity to, you know, keep up with any arrears or missed payments or defaults. And if they find that you're not keeping up to some sort of payment plan you've agreed with them, then they're perfectly at rights to take your property, try to repossess your property by going to court and bring you in for a court hearing. So typically you would have at least one or two, maybe three court hearings at most before it gets repossession mode, providing you've got legitimate evidence to show that you have a plan of action to be able to deal with the problem. But on day one in the first court hearing, if you haven't got a plan of action to solve the problem, then they're more likely to come after you and actually be able to repossess the property. So, for example, if you're unemployed, you've got no income, and your property's been in arrears for about 2 years, the likelihood of you getting away with not being repossessed is very low. Whereas if you recently found yourself a job, even though it's been arrears by 2 years, you can sort of got a contract, you've got proofs that you've got enough money coming in about 2 or 3 months, and then you've come together with some sort of a payment plan, and you say, look, I'm happy to pay down X amount of money from the arrears from my income or from something I've borrowed from family, and I'm actually happy to make the payment. I've actually made the payment today already of £1,000. These sort of things go a long way in terms of proving to the judge that you're doing something. But even still, there's no guarantees, because the judge could have easily woken up that morning, had an argument with his, she or he would have argument with his other half last night, and then in the morning at the hearing, they could actually technically easily turn on you because they've had a bad day. So it's not all plain sailing. I would just say avoid getting into arrears, avoid getting into negative equity. Ideally speaking, speak to us. We'll work out really how to solve these sort of problems before they come to a head.
Okay, so Carolyn says, good point made, I think, about your earlier points about your health. We have Sonia, who's just joined us, says hi, coming slightly late this morning. Right, so Lakhi Singh, 2 weeks off from the elections, and where do you think everything is going? Do you think it's going to be Mr. Trump, or do you think it's going to be a new president for America? Is there going to be a turnaround? What's going to happen? What's on the horizon? What do you predict as being the major incident that's going to either fix the world economy or push it over the edge?
I think I'm not an expert on global politics, but I would say, if I was hazard to guess, I would say that Donald Trump will definitely come back in. He's got a lot of clever strategies, let's just say, which would mean that he comes back in, even though he's running lower in the ratings at the moment. But he's a lot more able to pull strings, and he'll use every trick in the book to actually get himself in. So my bad guess is that he'll definitely be in. And what will that mean to the global economy? Just means that I think the global economy is in need of a correction. So the COVID-19 has just speed tracked the global correction of sorts. So that if I was to hazard a guess again, like I said, I'm no expert, everything's going to become gold backed. So if it becomes a gold backed type currency, it's the countries that are holding the most gold are going to be the ones that are going to be running the show. So that's my sort of take on it. So the UK, the USA, they are actually in for a major correction anyway. So that correction is bound to happen, and that's going to happen with the rise in interest rates. And so I think anybody that's involved in property or business now, I encourage you to get yourself in a fixed and basically consolidate what you're doing, and just ensure that if you can sell and have cash in your hand, cash is king in this market. So those would be my key pointers.
Excellent. Okay, so that's on where things are going. So with regards to the business world in the United Kingdom, I know you speak more about property, where your knowledge base is. What and how do you help businesses? What is it you're doing on the business side that helps businesses in this environment to either recover or turn around or look for finance? Do you do commercial lending or finance for businesses?
Yes, we do. We've got a number of clients that have come to us that are looking for something called CBILS and bounce back loan, and as well as there's a lot of businesses that have got assets, got their personal assets, but they've got a business that's still got potential, but they just need temporary cash flow. They may have actually used up their CBILS or their bounce back, but that's not enough to be able to do the things they need to do in terms of investment. So a lot of those type of businesses, we can help them to raise funds against either their asset or the turnover of their business. But we've got 6 or 7 different strategies to be able to raise short-term funds for them very quickly. Some of them we will also be able to get are able to get personal loans, which they can go and get from certain organizations, which are available on the market. So yeah, we're pretty comprehensive in terms of every type of lending option that's on the market, and anything that's not commonly known in the market, we also have access to. We have a lot of private lenders that will facilitate deals as well, or come up with more of a creative, tailored or boutique type solution for them.
Yeah. Okay. So what type of common faults or requirements are you seeing in the business community then, Lakhi? What is it that you've got? And I think they're saying this time the lockdown is going to be a bit more permanent, so it's not going to be a temporary one. Is that correct? What does the UK economy about it say?
Yeah, I think the lockdown looks a lot more aggressive this time in terms of the rules and the impact. So I'm going to do a bit of reading about what you can and can't do before I leave the house this morning. So you're not, I think as of today or tomorrow, I think it is you're not allowed to even visit family members. So you can't even do more than, so if you've got a household, it's not even actually 6 people, you're not even allowed to visit anybody because they're on a very high alert. But I'm going to check out all the facts and figures for all of that, so I can be a bit more educated about it, because the rules keep on changing every other day, and it's different rules and
where are you checking the rules from, Lakhi Singh? Which is it, a governmental website? Where is it? The local council?
The rules are coming up on news every morning pretty much anyway. So if I watch that for I usually say this is what you need to do. But I'm just going to type in BBC and type in COVID-19 regs, and then everything should be on there, but the 3 or 4 key prominent things that you're going to be focusing on. So as I do a lot of high net client meetings, attend sort of let's say low key events, it's important that we basically follow the rules to the T, and make sure that we're setting a good example for the alternative property business solutions community, and making sure that we don't actually help with the spread of a virus. So we probably want to go the extra mile to make sure we're within the rules. But at the same time, because of the type of work we're doing, we're helping a lot of people that are losing their houses. I sort of see the work we're doing as essential, as a key worker, as an essential service. So we're dealing with a couple of charity organizations at the moment as well, having quite a lot of complex issues around their assets. We're dealing with individuals who thought they could get money on bridges, second bridge finance, to get money very quickly, and a second charge for refurbishments. But the whole infrastructure for lending now is a completely new, it's a complete new, let's just say, structure. Things aren't really going to be working as they've been working. So anybody out there looking for funding, for bridging funding, they're going to need to work with somebody who's creative, but who's also connected at high net, mid net, and a startup type level. Can't really afford to be going to anybody that's on a traditional level doing bridging, because they're going to have limited solutions to solving their problems.
Okay, so you're going to, I mean, you're saying it's going to get tight, and it's going to get tighter in terms of liquidity in the market. So when do you see this bounce back out of the bottoming out of what's happening? And this is all centered around COVID. It's not anything to do with the economy or demand and supply. It is literally virus backed. Is that correct, Lakhi?
Yeah, it's literally down to the pandemic. It's not based upon any business logic or strategic growth in the economy or anything like that. It's all down to COVID-19 is the dog, and the populace is the tail.
Okay, so the dog is wagging the tail, or the tail is wagging the dog?
The dog is wagging the tail.
Okay, great. So, so give us something else for us to be considering then. With people who've got property and equity and assets and stuff, if they're losing value, how can they protect that value? Is there anything they can do? Can they look to put some